Hello dear students, welcome to my YouTube channel. In this video we are going to discuss dual aspect concept, which is also called accounting equation concept. Before going to discussion, let me tell you one thing dear students, that this is very important concept in accounting, because golden rules of accounting hidden behind dual aspect concept. English system or American system of accounting hidden behind dual aspect concept. Therefore, it is very important concept in accounting. According to me, if you do not know dual aspect concept, then 50 to 60% of accounting you don't know. Therefore, understanding of this concept is very important. Let us read. This concept is the core of double entry bookkeeping. Every transaction or event has two aspects. This concept is very important for the double entry system of bookkeeping. According to this concept, every transaction or event has two aspects. What are those? Point 1. It increases one asset and decreases other asset. That means in balance sheet, increase in one asset, there is a corresponding and equal decrease in another asset. That's what it means. Point 2, it increases an asset and simultaneously increases a liability. Means increase in one asset, corresponding and equal amount of increase in liability. Point 3, it decreases one asset, increases another asset. Means decrease in one asset, corresponding and equal amount of increase in another asset. Point 3 is just opposite to point 1. Point 4, it decreases one asset, decreases a liability. Means decrease in one asset, corresponding and equal amount of decrease in liability. Alternatively, point 5, it increases one liability, decreases other liability. Means increase in one liability, corresponding and equal amount of decrease in another liability. Point 6, it increases a liability, increases an asset, which means increase in one liability, corresponding and equal amount of increase in asset. Point 7, decreases liability, increases other liability, which means decrease in a liability, corresponding and equal amount of increase in other liability. This point 7 is just opposite to point 5. Like how here that this point 3 is opposite to 1, like that this point 7 is opposite to point 5. Lastly, point 8, it decreases liability, decreases an asset, which means decrease in liability, corresponding and equal amount of decrease in asset in the balance sheet. Now let us discuss all these 8 points with one example. Now look at the example. Balance sheet, liabilities, capital, bank loan, other loan are there. Assets, machinery and cash are there. 4 transactions are there. Again, I have mentioned 8 points which we have discussed to analyze with this example. Now transactions. Transaction A new machine is purchased paying rupees 50,000 in cash. That means machinery is purchased for rupees 50,000 by paying cash. Transaction B, a new machine is purchased for rupees 50,000 on credit. On credit you bought it, another machine. That means you pay cash later. Transaction C, cash paid to repay bank loan to the extent of rupees 50,000. Bank loan, look at the balance sheet, 75,000. 50,000 you cleared, you repaid. Transaction D, raised bank loan of rupees 50,000 to pay off other loan. In transaction D, you raised loan, you took loan to pay off other loan. Other loan is 75,000, you paid 50,000 rupees partly. Now we shall discuss effect of transactions. Transaction A, if you look at the transaction again, a new machine is purchased paying rupees 50,000 in cash. Effect is increase in machine value and decrease in cash balance by rupees 50,000. If you look at the old balance sheet, machinery is 2 lakh. Now you purchased machinery worth rupees 50,000. Therefore 2 lakh plus 50,000. Now it became 2 lakh 50,000 rupees. Whereas since you paid cash, it was in old balance sheet 1 lakh 50,000. Now after payment Since you paid 50,000 rupees, 1,50,000 minus 50,000, therefore decrease in cash by rupees 50,000. So increase in machinery 50,000 rupees and decrease in cash 50,000 rupees. That's what point 1 and point 3 says. If you look at here, increase in one asset. What is the one asset here? Machinery, increased by 50,000, and decrease in other asset. What has been decreased? Cash, 50,000 rupees decreased. That's what I said. Increase in one asset corresponding an equal amount of decrease in another asset. Now point 3 says it decreases one asset and increases another asset. So which asset has been decreased? That is cash. How much? 50,000 rupees. Look at here. In the old balance sheet it is 1,50,000. Now it became 1 lakh. Increases another asset. Which asset increased? Machinery. How much? By rupees 50,000. In old balance sheet it was 2 lakh. Now it became 2,50,000 after purchase. That's what I said. Decrease in one asset corresponding an equal amount of increase in another asset. This is the effect of transaction A. Now coming to transaction B, a new machine is purchased for rupees 50,000 on credit. Now what is the effect of transaction B? Increase in machine value and increase in creditors by rupees 50,000. Machinery, if you look at the previous balance sheet, it was 2,50,000. Again it is increased by 50,000 since you bought again 50,000 rupees worth of machine. That is for credit. Therefore under liability side, creditors for machinery 50,000. What it says? Machinery increased by 50,000, that is asset increased by 50,000, and creditors for machinery increased by 50,000, that is liability increased by 50,000. That's what point 2 says. Now look at here. Point 2 says increase in an asset and simultaneously increase in liability. What is the asset increased here? Machinery. How much? 50,000 increased. Equal amount of increase in another liability. Simultaneously increases the liability. What is the liability here? Creditors for machinery. That's what I said. Increase in one asset corresponding an equal amount of increase in liability. 50,000, 50,000. Point 6. It increases a liability and increases an asset. Which liability has been increased? Creditors for machinery. How much? 50,000 rupees. And increases an asset. Which asset has been increased? Machinery. How much? 50,000 rupees. Look at here, in previous balance sheet 2,50,000. Again new machinery purchased worth 50,000 rupees, increased by 50,000. Now 2,50,000 became 3 lakh. That's what I said. Look at the point 6. Increase in a liability corresponding an equal amount of increase in an asset. This is the effect of transaction B. Now coming to transaction C, what it says? Cash paid to repay bank loan to the extent of rupees 50,000. You paid cash to clear bank loan to the extent of 50,000 rupees. What was the bank loan you had? It is 75,000. Okay, 50,000 rupees you paid. Obviously cash is reduced by 50,000 rupees. Look at the cash in previous balance sheet, 1 lakh. Now it is reduced by 50,000. Therefore it became 50,000 rupees. And bank loan it was 75,000. Since you repaid 50,000, therefore 50,000 rupees bank loan reduced. Now bank loan became 25,000 rupees. This is the effect. That's what point 4 and point 8 says. What point 4 says? It decreases one asset. What has been decreased? Cash. How much? 50,000 rupees. Decreases a liability. What has been decreased? Bank loan. How much? 50,000. That's what I said. Decrease in one asset corresponding an equal amount of decrease in liability. And what point 8 says? It decreases liability, decreases an asset. Same thing. Decrease in liability corresponding an equal amount of decrease in asset. How much decreased? 50,000, 50,000. So this is the effect of transaction C. I hope you understood. Transaction D, raised bank loan of rupees 50,000 to pay off other loan. If you look at here in the old balance sheet, other loan is 75,000 rupees. What it says? You took loan again 50,000 rupees and pay off the other loan. So you took the loan, that means bank loan increased by 50,000 rupees. In previous balance sheet it was 25,000. Now again you took loan, 25,000 plus 50,000 became 75,000. and the purpose of taking loan to pay off other loan was 75,000. now after payment it became 25,000 rupees. That means 75,000 minus 50,000. so increase in one liability corresponding an equal amount of decrease in other liability. That's what point 5 and point 7 says. Let us read. Point 5 says it increases one liability, decreases other liability. Which liability increased here? Bank loan. How much? 50,000 rupees. Decreases other liability. Which is other liability here? Other loan. Decreased by 50,000 rupees. 75,000 became 25,000. Point 7 says it decreases liability, increases other liability. Increases liability. Which liability? Other loan. How much? 50,000. Increases other liability. Which liability increased? Bank loan. How much? 50,000 rupees. So every transaction and event has two aspects. There is an increase, then equal amount of decrease. If there is a decrease, then equal amount of increase. So as we discussed, every transaction event has two aspects. So this gives basic accounting equation. What does it mean? Equity or capital plus liabilities equals to assets, or equity equals to assets minus liabilities, or equity plus long-term liabilities plus current liabilities equal to fixed assets plus current assets. That's what the balance sheet. These two, that is fixed assets and current assets, total assets, equity plus long-term liabilities plus current liabilities, or liabilities. That means it comes under liability heading. Or equity plus long-term liabilities equals to fixed assets plus within bracket current assets minus current liabilities, which is nothing but working capital. Or equity equals to fixed assets plus working capital minus long-term liabilities. That's why this concept is also called accounting equation concept. Now we do the application of dual aspect concept to this illustration to find out required information. What are those? Develop the accounting equation from the following information. Previous year balances, current year balances are given. Now capital 1 lakh, question mark. That means we need to find out by applying dual aspect concept. 12% bank loan 1 lakh each. Trade payables 75,000, 70,000. Fixed assets 1,25,000, 1,10,000. Trade receivables 75,000, 80,000. Inventory 70,000, 80,000. Cash and bank 5,000, 6,000. Required to find out profit for the year as on 31st March 2017. You need to find out capital, that means question mark, and also you have to find out profit for the year as on 31st March 2017 by applying dual aspect concept. This is very interesting because the application works here. Now the solution for the year ended April 1st 2016, equity, which is nothing but capital, it was 1 lakh rupees as given in the illustration. Liabilities are bank loan plus trade payables. If you look at the illustration, 1 lakh and 75,000. So liabilities became 1,75,000. Assets, fixed assets plus trade receivables plus inventory plus cash and bank. Fixed assets 1,25,000, trade receivables 75,000, inventory 70,000, cash and bank 5,000. That is in previous year. The total comes to 2,75,000. Now you have equity 1 lakh the previous year and liabilities which we calculated total 1,75,000. And assets we calculated 2,75,000. Okay, that's what we discussed, that equity plus liabilities equal to assets. So equity is 1 lakh plus liabilities 1,75,000, total 2,75,000. That is nothing but assets. For the year ended 1st April 2017 or 31st March 2017, you can write either of the one date. Assets, if you look at the illustration, fixed assets 1,10,000, trade receivables 80,000, inventory 80,000, cash and bank 6,000. So total assets comes to 2,76,000. Liabilities, if you look at the current year balance sheet, bank loan 1 lakh, trade payables 70,000. So liabilities are 1,70,000. Now apply the dual aspect concept or accounting equation concept to find out capital. Equity equals to assets minus liabilities. As we know, assets are 2,76,000, liabilities are 1,70,000. So our equity or capital is 1,06,000. So we found 1,06,000 capital or equity. Now how to find profit? Profit equals to new equity or else new capital minus old equity or else old capital. Which is the new capital which we just found, 1,06,000, which is the old capital which is given in the illustration, that is 1 lakh. Therefore 1,06,000 minus 1 lakh equals to 6,000, which is nothing but profit. If you remember, profit will always be added to capital. So this is how you apply dual aspect concept, either to find current year capital or previous year capital or profit or loss or any asset. You can apply to find out any asset, even any liability. That is the wisdom behind dual aspect concept or accounting equation concept. So this is regarding dual aspect concept or accounting equation concept.